This is our Forex blog for March 14th, 2013, and there's literally dozens, if not hundreds, of different ways of using our software, but I like to focus on our Forex blog each day, showing the easiest way. And in my opinion, using these currency indexes, you can see here the pound index. I basically have created an index comparing what the pound is doing versus all the other pairs. You can see the previous day's high right here, and when it breaks out above the previous day's high, you can see it's continuing to trend up. It finds, once resistance area gets broken, it tends to become support, 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 and you can see it just takes off. You can draw trend lines on this, you can draw fibs on it, Andrew's pitchfork, you can spot double tops, double bottoms, and basically you want to buy the strongest currency versus the weakest. Here you can see the yen is underneath its hourly moving average here in gray. It breaks down underneath the point of control. This is where most traders have positions in all yen pairs from yesterday. And sometimes it's in the middle of the range, sometimes it's near the high, sometimes it's near the low. You can see the dollar, the point of control was closer to the high than it was the low, and it's certainly above the middle. And once that area gets broken, it's a sign of weakness, and the dollar's likely to continue down. Our containment bands usually do a great job of containing price. When they hit the containment band, especially the white one, price tends to stop trending. And you can see that with the dollar. Once that continued down and it had a false breakout underneath yesterday's low and came back up, that's a good reversal sign. Anyway, earlier today, the dollar broke down underneath the hourly, underneath the point of control, coming up to 10. At 10 o'clock of these four pairs, clearly the pound is the strongest one. So basically you want to buy the pound dollar. It's that simple. Some people use our 5-minute charts, and some people prefer our range charts. Let me put the pound dollar on the 5 pips per bar range chart. But whatever tool you use, notice the pound is above the hourly moving average right here, and it's kind of breaks out over the sideways rectangle high and just takes off. And you can see from that chart, even if you got into this trade late at 10, here's 10, buy a pullback here, it goes up about 25 pips, buy a pullback here, goes up about 30 pips, buy a pullback here, maybe you would have made 5 or 6, buy a pullback here. And once it's above our upper containment band, typically it's a riskier trade to buy. So basically from this point onward, you're kind of taking a risk buying. However, if you looked at our currency indexes, you saw that the pound was just continuing to go up. So it's entirely up to you whether you want to keep buying it. But what I would advise is if you do buy a currency significantly above the upper 2.0 containment band, do a half position and be very quick to get out. And usually at these major resistance areas, when it's that far above the upper containment band, there's no more room to trade this. So let's look at some other ones. You can see here the pound was going sideways, but it was above the previous day's high, above the hourly moving average, and the yen was underneath its hourly moving average all day. So another excellent one to be focused on buying would be the pound yen. Pretty much the entire day you're looking to buy this. And I'm not going to update the range chart on the bottom. We'll just look at the top 5-minute chart. When you're trying to get 20 to 50 pip moves, it doesn't matter if you use a range chart. Range chart's excellent for scalping. It's also excellent for longer term moves as well. You want to move your stop up, and usually once it makes a two-wave move, put your stop underneath the lows, wait for a pullback. Notice the perfect oscillator. When you get a strong trend and it goes and hits the lower containment band, basically that's a decent time to start looking for buys. It hit it again right here. Notice that was the end of the move. Hit it again right here. You might have lost on that one, and then the second trade here worked. It hit it again right there, and you can see the market went up. And then you got a decent sized pullback right here where it actually hit the minus 80 level, which is an extreme pullback for that time of the day. The perfect oscillator is named perfect oscillator because unlike the MACD, stochastics, RSI, all the other in my opinion silly oscillators out there, that all use periods, 9 periods, 14 periods is common. And if a big bar happened 14 periods ago, and then a new bar forms, well, guess what? That bar is now 15 bars back, and it gets yanked off the oscillator, and all of a sudden the oscillator jumps, or it changes radically. And for that reason, I hate oscillators. Ours does not use periods. It uses statistics based on this currency and this currency's time of the day, and it uses volatility, and these minus 80 and plus 80 levels typically is when the price is going to stall and reverse. Notice right here, it was the end of the move. Right here, the market did stall there for a little bit and went up a little bit more. You can see this area here was also at the plus 80 level. Right here, guess what? The price is done. Right here at the low, price is done. And you will find that there's a reason why I call it the perfect oscillator, because not many other words can describe this indicator. It just is perfect. And when you use it on a currency that our indexes are telling you to be in, you know, the yen's weak, the dollar's weak, the pound's the strongest, you know, you want to be looking for buying in the pound dollar and pound yen. So let's take a look at some of the other currencies on here and look at some of the trades you can take. There's so many that you can take. Now this one, the daily, weekly, monthly trend is down, so you might, you know, look for trades when they break out of little wedge patterns from about 7:30 to 9. It would be a decent time to look for sells, and you can see it's underneath the previous day's low. You might have looked for sells in here too. That obviously probably had a small loss. But the Swiss from 7:30 to 9:30 was weak. We already know that the pound was strong, so the pound Swiss from 7:30 to 9. Let's take a look at this. I mean, this is pretty much a no-brainer thing. Here's 7:30 to 9:30. We're looking for buys. You know, you're looking to buy pullbacks, and every single one of them worked. You know, some more than others. And also notice the perfect oscillator. Plus 80, end of move. Minus 80 right here, end of move. It was slightly above the 80 level, end of move, and it goes down. And again, that's why we call it the perfect oscillator. It's nearly, I mean, I'm not saying it's 100% accurate. Nothing is. But as far as oscillators go, it's the best oscillator in the market, and for many reasons. So let's take a look again at some of the trades you can take. The daily, weekly, monthly trend of the Australian is up. You got a nice trend line underneath here. You can see it's kind of going in a nice orderly direction up. You know, up. It's inside this range. It breaks out over the previous day's high, but you can see the statistical momentum is going down. And so when it comes back into the previous day's range, breaks that trend line, great place to go short. 11:30 to 12. You can see the Swiss up here did the exact opposite. Broke out at that same time. So guess what? You look to sell the Australian Swiss. It doesn't take a rocket scientist to trade with this method. And in fact, I really believe that most people could learn to trade successfully with this method in less than a week. You know, just watching it over and over and getting a feel for it. The Australian Swiss, 11:30 to 12. You can kind of see it's in a little pennant formation here, with volatility getting smaller and smaller. It breaks out, and guess what? It fell from around 70 all the way down to 20, 50 pips. And when you find one currency that's strong and another one that's weak, the average moves varies between 20 to 50 pips. And you can also spot so many different patterns on this. Here, the daily, weekly, monthly trend is down, so we would prefer to sell this. It is above its hourly moving average, and you have a nice little head and shoulders pattern right here. You know, and so when it finally breaks down right here at 12:30, which one's strong? Well, we see the Swiss is strong. I don't have the other pairs up. I don't know if the pound is strong at 12:30, but we'll just take a look at selling the New Zealand Swiss at 12:30. Very high probability pattern. Again, I would bet that this trade's a winner, probably 20 pips or more. Looking to sell this at 12:30. And you can see that this one had a false breakout above the hourly moving average. Here's 12:30. It breaks down. It fell from around 85 down to about 75. So it only fell about 10 pips, unfortunately. It had already kind of gone down about 25 pips beforehand. And notice where it stalls, right at the lower containment bands, and we also get an extreme low in the perfect oscillator. Again, perfect oscillator tells you that the move is likely over. Occasionally, price does continue, but you want to be watching it like a hawk. This will help you not be greedy. Too many traders, have a 20-30 pip win. They're hanging on. They want 50 pips for some reason. The market will give you 5 pip moves. It'll give you 1 pip moves. It'll give you 30 pip moves. It'll give you 18 pip moves. It'll every once in a while give you a 150 pip move. It'll take losses from you. It will go up 8 pips and come down and stop and hit your stop at break even and then shoot 50 pips your way. The market will do everything at different times, but just don't be greedy, and this tool will help that. So let's take a look again. Here the CAD, you can see this is a pretty high probability trade. Came down to the point of control. The daily trend was mostly up for most of the day. The weekly, monthly trend are up. It's made a slightly higher high here. It came down and found support at a slightly higher level. The upwards momentum was stronger than the downwards momentum. This is a pretty decent place to buy. I typically don't trade afternoon, but more and more I am with these indexes because they're some pretty decent high probability trades. You just have to wait 30 minutes or an hour longer than normal to get your 10 to 30 pips on the trade. But this is a high probability trade, and you're trading with a longer term trend. The CAD at 1. So what do you want to buy or sell the CAD against? Well, whatever the weakest one is at that time. You can see the Australians falling in that time. So let's take a look at selling the Australian CAD. Again, it doesn't take a rocket scientist to use this tool. This trade is right here. It had rallied up and failed up at the high. You had an extreme that was way underneath the 80 level, and then on this move up here, it's counter trend trade. Notice how it hits the 80 on the high. These kind of trades, when I see one shoots through the bottom, perfect oscillator, extreme low, and then comes up and hits the 80 on the high, I tend to just get in right at the close of that bar, somewhere around 40 right here. And so you wouldn't even have to wait for it to break down in this case, and you would have snagged another 10 pips. I would have probably got in at 40 and been out somewhere around 18 to 20 here for a quick 20 pips in 10-15 minutes during a relatively dead time of the day. And again, that's why I love these new tools. There's many ways to trade using our software. A lot of tools I don't even go over because, at the end of the day, most people just want to trade, find high probability trades, make their 10 to 50 pips, and be done for the day. The quicker the better, and then go on and enjoy their life.